Hello, my name is George and welcome to this YouTube channel, to this particular YouTube video. As I promised, I told you I'm going to do this video, and yes, I am doing it. My name is George and I'm a seasoned trader, and I will be taking you through this particular session to show you for us to mark out the candle range theory and to understand how to trade the candle range theory. One of the most basic and very most used strategies in the market, and we are going to look at it and see how to trade it and how to mark and be on the right side of the market while trading the candle range theory. So if you are new here, I'd really appreciate if you consider subscribing to this YouTube channel, and if you are returning to learn, I hope you get what you came for. Okay, yeah, so we just have to get rolling. And yeah, so first things first, the candle range theory is basically a theory based on liquidity sweep, based on buy side liquidity and sell side liquidity sweep. Okay, yeah, so we are gonna we'll be looking, of course, I'm assuming by now all of you know what liquidity is and you understand how to trade liquidity at this particular point. If you do not know, you can comment down in the comment section. I can consider doing a video explaining the same about liquidity. But basically, we have two forms of liquidity. For those who do not know, we have the buy side liquidity and the sell side liquidity. Buy side liquidity is basically liquidity lying above the market, and sell side liquidity is basically liquidity lying below the market. Okay, so here we can be having sell side liquidity, or even here that is sell side liquidity. So the CRT is just basically based on one of the either the highs getting taken out or the lows getting taken out, and then you target the opposite. So for instance, maybe you have the high get taken out first, and then you consider, or you opt to take sells to go take out the low, or the low gets taken out and you consider taking trades to the high to take out the high. That is basically what the CRT is. Of course, you're going for this to work, you have to be on higher time frame. You have to be looking at your charts from a higher time frame scale so that it actually makes sense. Because I usually say this not once, not twice, that the higher the time frame, the higher the precision. The lower the time frame, the lower the precision. When you're looking on the lower time frames, of course, you're going to be seeing a lot of candle movements, and that is a lot of noise in the market, and you could easily make a small or a big mistake while trading on the lower time frames than on a higher time frame. Of course, the lower time frames can give you very clear sniper entries, but for clear market precision, you have to be having a higher time frame bias. Okay, so that is basically what you're going to be talking about and seeing how to trade the CRT. Just as I've said, we are going to be using a higher time frame for this particular example. I'm going to be using the daily time frame because we are still creating up on the video that I'm supposed to do about how to get or how to identify the daily biases, and this is going to be one of the very important ways you can trade the daily biases. Okay, yeah, so for this particular case, we're going to be using the daily time frame. Okay, so basically on the candle range theory, two key words that we are having here is that we have the candle. So we have the candle that we are going to be trading, or the candle that is going to be creating for us the buy side liquidity and the sell side liquidity, and then we have the range. We have the candle that is also going to give us the range that we will be trading. Okay, so we have the candle that is giving us the buy side and the sell side liquidity, and then we have the candle that is giving us the range that we will be trading. Let me just draw an example. For instance, we have a bullish market, that is a bullish candle. So that candle is going to be our candle that is going to give us the buy side and sell side liquidity, for instance. And then we can have our next candle now that is going to create for us the range. Let's say that is the candle, and this particular candle, we're gonna take this candle as let me mark these as let me mark this is going to be our bullish candle. So let's paint it green, right? Let's make it green. So that is going to be our bullish candle, and we're gonna make it green. And then this is going to be our bearish candle. you can see it's going to be a black candle. So this green candle is now the candle that you're going to be trading, is the candle that is going to create for us the buy side liquidity or the sell side liquidity. Okay, that is going to create for us the buy side and the sell side liquidity. I want you to follow me very keenly. So the buy side liquidity is going to be the high of this candle. That's why we're going to have the buy side liquidity, and then we're going to have the sell side liquidity at the low of this candle. Okay, so we're gonna wait to see price take out one of the one either the high or the low, and then we take a trade to the opposite one. So for this case, we are going to be expecting to see price take out the high of this candle, right? So that is exactly what you can see there. So for instance, you can see price has taken out the high and it has closed below. Very important, price must take out the high of the candle and close below it. So this will show, or this number one, this is a bearish candlestick, and you can clearly see that being a bearish candlestick, sorry about that being a bearish candlestick and has a long upper wick means that we are having a lot of bearish rejection. There are sellers that are pushing prices down. Okay, yeah, so you can't be expecting this bearish momentum to continue, right? Yeah, so that would mean that the next target you can have, if the bears are now starting to gain control, is this particular low, which is now going to be your sell side liquidity. So you would be expecting now the next candle to be a bearish candle as well. So either can go all the way and close right about there, which would just, but the most important thing, however this candle closes, that's not your problem, that's not your business. The most important thing is this candle must get to this low, because that is the only way we would have hit you would have hit your take profit, right? Yeah, so the most important thing is you're targeting to see this candle take out that low. So whether this candle decides to close here or wherever it decides to close, your aim is to see price take out this low. And yeah, because that is where you'll be going, you'll be having your target. So I've told you for this particular model, we have two things that we are much caring about. Number one is the candle that is creating for us the buy side liquidity and the sell side liquidity. Number two, the candle that is creating for us the range, which is this candle right here. This is the candle that is creating for us the range, that is taking out one of the liquidities, either the buy side or the sell side liquidity. Okay, yeah, and then you target now the low. Once the low is hit, you don't care about whatever happens in the market. You're out of the market. You wait again till you see a similar thing again. Okay, yeah. So I'm guessing that is it with the example. So let's get right on the chart so that you guys don't say, oh, it's only working on theory. Nice. So first things first, let me just, for instance, give me a minute. For instance, this is going to be our first example here. So you can see, first things first, this is what happened for this particular day. You can see we had this is the candle, right? And then this is the candle that is going to create for us the range. So what you're looking for is to see a candle that a low has been swept or a high has been swept and price has closed within the range of that candle. Okay, so you can see this is now going to be our buy side liquidity for this particular candle, and this is the sell side liquidity for this candle. And you can see the sell side liquidity has been taken out and prices have closed above it, which is showing, and clearly from what I had done from the first video talking about how candles, like interpretation of candlesticks and stuff like that, you can see clearly that we are having a long lower wick, which would denote, or which would mean that we're having prices strongly gaining some bullish momentum, because this long lower wick means that there is a lot of bullish momentum that is pushing price higher. So that is the second conference. The first conference is price has closed above this low, and then the next thing that is the first conference. The second conference is price has pushed up all the way to this point from here. So it means that there is a lot of bullish rejection that is pushing prices higher. Okay, yeah. And then now what you'd be looking out for now is you will be expecting the next candle or the next few candles to be targeting this high. Of course, I'm gonna be showing you how we'll scale down to the lower time frame to find now where you're supposed to go in to the market from. But for now, that is just it. You can see this is where we took out the sell side liquidity, and after we took out the sell side liquidity, you can see we also had to check out the buy side liquidity. I hope you are seeing that now. That is the candle high, the candle low. You don't just mark any random candle. You can see we didn't mark, we have not marked such a candle like this one or this one, because price has not taken out any low or any high and closed within. Okay, you have to look for a candle like this. You have to look for a model that's looking like a similar case like this. So we also can also get another example from here. So you can see here price has taken out the high of this candle, right? Once we took out the high of that candle, which means that now we can be targeting the sell side liquidity for that for the same candle. Remember, this on the daily time frame, you will be having a better, or you will be looking for quite a number of pips. And if you're trading on daily time frame and you get a setup on a daily time frame, you all can agree that it's usually more precise and has a better win rate than any other than trading on any other time frame. Okay, yeah. So first things first, you can see what has happened here. Price has taken out the high and closed below, right? So it means that you will be expecting the next few candles to be dropping to take out these low, either the next one candle or the next 2 or 3 candles, whatever, but you know that you are targeting these low. Okay, yeah. So for the next candles, you will be targeting that low because price has taken out this high and closed below it. I'm really emphasizing on that so that no one gets confused. Price has to take out the high and close below it. Price, or take out the low and close above it, so that so this is the range that you are trading. Okay, because now after this has been created, and you can see it has a long upper wick, which was previously I explained on my previous video, that this one just denotes that there is a lot of bearish momentum, like bears are now gaining control to push the markets lower. So you can be expecting to see prices strongly pull down to take out now the sell side liquidity, because anytime price takes out a high, must take out a low, or anytime price takes out a low, must take out a high. Okay, I hope we are together on that. Okay, so for the next candle, you will be expecting to see price drop to take out the low of that candle, and you can clearly see that that is exactly what has happened here. So you can see this was the high. Give me a minute. You can see that was the high, and this was the low, and you can see what has happened is price has taken out the low and the high of that candle, right? So it means that basically that is it. No big deal, no rocket science. I'm guessing. If you've not understood by the way, you can ask any other question on the comment section. I'll be so glad to either do another video or to explain, just to do something so that I explain to you guys what you can be looking out for when you're trading the CRT. Of course, actually very many people trade this model and it's working. But I've emphasized as well that it only mostly and majorly works when you're trading on a higher time frame. It's not so good when you're trading on the lower time frame. Let me give you the third and the last example for this case. So you can see here, this is the candle high. The candle, what has happened is the candle high has been taken out. That is very clear, right? That is the high of the candle has been taken out. So once we've taken out the high of that candle, what you are usually are expecting is, sorry, once we've taken out the high of that candle, what you're expecting is price to also come and take out the low of the candle, right? We've taken out the high of the candle and closed below. Yeah. So for this to work, I'm emphasizing again, price must take out either the high and close within the range, or take out the low and close within the range. So yeah. So you can be expecting the next few candles to be targeting to take out this low. Okay, so and that is exactly what has happened for this case as well. See, price has come and we have taken out this low as well. So I'm not sure I don't know if there is anyone who has not understood, because I think this is quite easy, very easy. Now the big deal is, now how do you scale down to the lower time frames to find an entry on the lower time frames? Okay, yeah. Now I'll do that video as well. I'll explain to you now how do you scale now to the lower time frames to spot an entry where you're supposed to go in from. But from the three examples that we had so far, I think all of you by now can clearly see that there is something that price gets to before before we enter any market. So for me, what I usually do is I'll just take a trade of the half of that candle. Okay, half of that candle, that's where I'll take my trade. Okay, same case with here, you can see as well, price pulled stretched higher to the half of that candle. Of course, you can always you just draw a rectangle there, and then yeah, draw a rectangle, take a trade from the 50% of that candle. That is where I take a trade anywhere. Even for this particular case, what I'll do is just come, this is the candle that the candle that created for us the range, 50%, take a trade from the 50%. Of course, that is the trade that will push you now. That is where you take lower. That is the easiest way. But then now there's a way that you scale down to the lower time frame to spot now the exact point where you're supposed to take a trade from on a lower time frame. Okay. Yeah, so I'm guessing for now that's where I will close it from until I see you guys again on my next video. So now the next video will now be talking about how to get the daily buyers, how to identify now what buyers am I looking for, what am I expecting to see in the market uh, on any single day once I already know what happened yesterday or the day before yesterday. But this one also can give you a clue, right? Yeah, so for now guys, I have to say till next time, I'll see you on my next video. Okay, yeah, for now I have to leave it from there. Okay, yeah, so if you're new to this channel, you can consider subscribing to my YouTube channel. I'd really appreciate. And if you're returning, I hope you've learned from this video. Yeah, you can tell me in the comment section if you have picked up something or if you've learned something from this video today. Make sure to join my free Telegram channel. The link is on the description. As well, follow us on TikTok, Instagram, and all other social media platforms as George FX Mastery. Okay, have a blessed one, guys, and I hope you've learned. See you on my next video.